Hey everyone, welcome to another video, and today is September 2nd and currently I have 16 open option positions and I'm going to go through all of my positions right now, hopefully in 5 minutes or less. And go! Okay, the first one is a workhorse called debit spread. It has an expiry date of September 4th. As long as we close this position above this strike price that I sold it at, $17.50, I will be in the money. Right now, Workhorse is at $18.90 and there's only 2 days left, so it's looking good. This should be in the money, hopefully. This is my Tesla call debit spread. It is not looking good. Yesterday it was looking good, but right now we are $40 away from being in the money. And I tried to actually close it out at $1.30, which is about 50% of what I bought it for. The order didn't get filled, so I'm stuck right now at a loss, and now I'm just going to write it out. This really sucks. This is going to be my biggest loss of the week, but I'm psychologically ready to lose it all because I can't control what direction the market goes. I can just control how to manage my risk. Okay, this is one of my larger positions. I still have 5 contracts left. It expires at the end of this week and I'm in the money as long as Apple closes above $126.25, and it's looking really good. I think all of these will be close to max profit. Here's a Rocket debit spread with an expiration date of September 18th, and I will be in the money as long as Rocket closes above $26 by that date, and so far looking good. Here is another Rocket debit spread with a September 18th expiration date. I have 3 of these contracts at a cost of $150. Its current market value is $210. I think it would be smart to take profit at around 50%, at least on one of the contracts. And if it hits it, I'm going to do it. Here is a long call on Apple with an expiry date of October 16th. Generally, I'm long on Apple. I think it's going to keep growing. I got in at a pretty good price. It was at a nice dip. Currently, we're up plus $43. And this is definitely a more YOLO call just because it's a simple call and I'm not hedging my risk in any way. But it's just for fun. We'll see what happens. Here I sold a Workhorse put for $16 at an expiry date of October 16th, and I got $293 in credit. As long as Workhorse stays above $16 by October 16th, I should be able to keep most of the credit. Actually, sorry, $265 of credit. I don't plan on waiting till expiry date though. Once I get to about 50 or 60% profit, I'm going to close it. Next, this is a super long Workhorse call at $70.50 strike price with an expiry date of 1/15/2021, and I am very bullish on Workhorse. This is another very YOLO-y call. My most expensive call yet at $610, but I really believe in Workhorse. So far, it's doing really well. This is a Rocket call debit spread with an expiry date of September 17th. Right now, I'm in the negative, but we still have a lot of time. As long as Rocket closes above $25, I would get the max profit, which would be $500 minus $213, so $287. Finally, another call debit spread. Are you seeing a pattern yet? I love call debit spreads. Expiry date is 9/17. Rocket just needs to close above $23 and I make the max profit, which would be $500 minus $228, so $272. And that is everything in my Robinhood. Let's move on to my Ally Invest account. In my Ally Invest accounts, I'm selling puts. I have a put in this pharmaceutical company at a $4 strike price and another one at a $5 strike price. I like to take 2 different positions for the same stock and the same expiration date just to spread out my risk a little bit. So far, there are some gains. The credit I received for this is really quite ridiculous. The implied volatility of this stock is really high. That's why the premium was so high. We'll see how it pans out. The expiration date is not for a long time, but just like my previous trade, I plan on closing it out once I get at about 50% profit. These are 2 NEO puts, and I have it at 2 different strike prices, one at 16, one at 17. As long as NEO does not drop below these, I should be able to make the money. With the expiration date more than a month away, I plan on taking profits roughly about 15-20 days in, hopefully around 50% profit. Finally, I have my TD Ameritrade account. I sold 1 TNA put today and it's doing really well. It's already gained $20, and honestly, once it hits $25 or $30, I should close it. So I will probably close this out tomorrow. I just bought another Workhorse put that is not doing well as Workhorse continues to fall, but I just need Workhorse to stay above $15, and right now Workhorse is at about $19, so still a lot of time to take profit. And that's it. Those are all 16 of my open positions. Probably way too much, but I am addicted to this. It's a lot of fun. I'm making money. Once I start taking some losses, and they're bound to come, I'll probably slow down a lot. As of right now, I'm on the limit of what I'm able to keep track of, and all this money is a smaller part of my overall portfolio. I still have a lot of positions in different stocks, and I feel safe about trading with this money. I know in a catastrophic situation where if I lose a majority of these plays, I will still be okay. So I highly recommend you don't trade options unless you feel secure or you really understand what you're doing. This is not for the faint of heart. Am I going a little bit too crazy? Let me know in the comments below. Thank you for watching and stay tuned.